Hello and welcome to the CNBC TV 18 Mumbai newsroom. I'm Sumaira Abdi and you're watching Mutual Fund Corner. On the show today, we're going to talk about Axis Mutual Fund because last week the AMC announced the suspension of two fund managers, one of them also their chief dealer, pending what they call a suo motu investigation. According to the statement that they released, this investigation began in February. But curiously, the decision to suspend the two accused was taken just a day after Moneycontrol first brought this discrepancy to light last week. According to well-placed sources, the allegations include front-running and price rigging of stocks. So far, the status is that AZB and Partners and Alvarez and Marcel are the two external agencies who are probing the case, and I'm told that SEBI is also being kept apprised of the developments. So in light of these developments, what should the unit holders of the 7 impacted schemes do where these two fund managers were managing the schemes? Do the developments impact those who might have invested in these schemes? As well, what should be done with the other schemes of Axis Mutual Fund? Do they too get affected? Does this event dent sentiment, or should unit holders maintain status quo at least till we receive the final findings of the ongoing investigation, which I'm told is likely in the next 5 to 6 weeks? Joining in to answer all these questions and more is Mohit Gang, Chief Executive Officer and co-founder at Moneyfront. Hi Mohit, thanks very much for joining in. So given the developments of last week, how would you evaluate the 7 schemes in particular where the two fund managers were managing the schemes?
Okay, I think Sumaira, whatever has transpired is extremely unfortunate, and these are like those black swan events in the mutual fund industry, which no one kind of prepares for. But out of the 7 schemes, I think 4 are ETFs, which are more passive in nature and are based on an underlying index. So our assumption or whatever our theory out there is fairly clear that being based on an index, it doesn't impact the scheme so much because you are any which ways the returns are mirroring the returns of the underlying index basically. So I think the 4 ETFs, which is the consumption, the banking, the Nifty ETF and the tech one, they are fairly okay to be held as it is because, and plus the AUM also on those schemes were very, very low actually. The other three schemes were actively managed schemes. The Arbitrage, which was the largest of the schemes at around 5,800 odd crores of AUM, and the Quant and the Value Fund. Now, coincidentally, Quant and Value funds were launched just not even a year before, actually. These were like recent NFOs. Right. So out there, the performance, it's very difficult to judge them by performance because the performance is less than a year. And I don't think investors should worry and come out of these schemes in a haste. Basically, the new fund managers have been appointed. Those are all veteran hands in the industry. The good part is the two fund managers who have been asked to move out of the schemes basically were managing only these schemes, and these were all relatively smaller schemes. The bigger and the better hands at the AMC, the CIO, the other fund managers like Shreyash Devalkar, Anupam Tiwari, Jinesh himself, who's the CIO, they are all out there managing the schemes fairly well, and all the other schemes also seem to be doing fairly okay in the markets basically. So our assumption out there is that for the 7 schemes, I think investors should just wait and hold on to the schemes. As a fund house, the fund has the performance has been fairly stable and rock solid. In fact, 2019 to 20 was the period, Sumaira, when Axis was the blue-eyed boy on the street, and typically every scheme of theirs was touching gold at that point in time. Of late, the performance has dipped a little, but still the fund house and the schemes continue to be the quartile 1 performers. So my sense is investors need not worry. It's a conduct and a malpractice issue at an individual level, not at an institutional level.
Yeah, we'll. No,
Yeah.
Mohit, I take your point. I'll get to that. Let's just finish reviewing the schemes first. You know, because one of the allegations is on stocks is that there was heavy concentration of a certain variety of stocks, right? So therefore, would on the portfolio level there be a worry either on these 7 schemes or any of the other well-performing popular names?
Look, Sumaira, I think, yes, that's a fact that few of the stocks in which Axis AMC holds a position, the position is very, very concentrated. In fact, there are a few names where 100% of the DII holding or the mutual fund holding, non-ETF holding is held only by Axis AMC. And there are many stocks where AMC holds a position above 50% and above 75% also, which implies that the concentration in those particular stocks, and these are all mid-cap and small-cap names, mind you, is is very well. So the show out there is very well run by Axis. Now there could be a case that the investors have got impacted in these schemes because either the stocks were bought at a higher price because of the front running thing which happened, or the stocks were sold at a lower price because obviously there was someone else running the book at the front and trying and maneuvering the stock. So I think SEBI, once it gets into a forensic audit and all the investigation is completed, we have had a precedent before when a particular AMC was penalized and investors were compensated for the loss in the scheme. It was a long back scenario, which I still recall. So in my sense, if SEBI in their prudence considers that there has been a loss to the retail investors because of malpractices in these schemes, they will actually ask the fund house to compensate it in some form or manner.
Yeah,
So I think
last time
investors
as
should just
well.
hold on.
Yeah, I think it was the AMC that compensated the unit holders, right?
Yes, yes.
Okay. Okay, so your recommendation, therefore, is that at least for now, till the findings of Axis's investigation are known, investors, maintain status quo. Or do we wait? I mean, is there a chance that SEBI may do an independent review as well?
No, I'm implying more from SEBI's front, Sumaira, out here. Axis
Okay.
obviously has been doing their own investigation internally, and I'm sure they'll come out with their own conclusions. But in such cases, I think it's better to rely on an independent investigation. And I think the best out there is SEBI. SEBI, I'm sure, will conduct a proper audit and thorough review of the books. And if they really find that investors have been wrong done with, so I'm sure there'll be a case of AMC compensating the investors if at all it comes out to that point.
Okay, so if there has been an impact on the NAV, it will be compensated. We're going to take a very quick break. There are more questions I want to ask Mohit on the other side. Do stay tuned. Hi, welcome back. Still with us, we have Mohit Gang, Chief Executive Officer and co-founder at Moneyfront, and we're talking about what the recent developments at Axis Mutual Fund mean for their unit holders. Mohit, Axis has issued two statements, in fact, one directly to unit holders as well. But does it strike you as odd that the AMC never alerted unit holders about this investigation when it started in February, and in fact allowed the two fund managers to continue managing those schemes until Money Control finally blew the lid on it? I mean, what should have been done, or what should have been the right course of action? And while so far we have not seen much redemptions, do you expect that redemptions may rise going forward?
Oh, I think absolutely hats off to MC Insider. I also got to know of this from after reading that post. But yeah, I think it's fairly odd, Somaira. To be very honest, I think Scissor's wife must be above suspicion in all cases, right? And that goes without saying. For people who manage retail money, people who manage public money, AMCs as large as this size, 2.65 lakh crores of assets, seventh largest in the country, they ought to be more prudent. And if they even had an inkling or even had a suspicion, I think they should have taken action much before. In Feb itself, it doesn't take much to remove a particular person from managing the scheme and move him to some other position till such time that you complete an investigation. At least in that manner, you kind of make sure that the trust stays strong in the schemes. So I'm sure there'll be a soul searching on that point also, and I'm sure in their own prudence they would have taken that call. But I'm sure this answer ought to be given by the MC as to why this delay in suspending the two fund managers when they were already under investigation. No person in such position should be allowed to continue till such time that he is absolutely overboard and clear on the dealings.
Yeah, absolutely. And the transgression, whether minor or major, should be equal, and therefore the fund managers, even in my opinion, the fund managers should not have continued if they were being investigated. But some are saying that these lapses occurred because there was work from home, which is a unique event that happened because of the pandemic. But that's an event that would be similar for all AMCs, right? Everybody would have worked from home. Dealers of all AMCs would have been working from home. Therefore, should SEBI come forward and ask all AMCs to conduct an audit or a review of their processes just to ensure that everybody is above board?
Look, Sumaira, I think that's a fairly lame excuse if someone tells you that it was work from home. Business continuity practices, or BCP, as you very well know, are very common practices at such large places, right? And I don't think so. Feb onwards, there was work from home. People were resuming back at work. I'm not sure what was the exact status as Axis AMC at that point in time, but the work had fairly resumed. Right. Obviously, these malpractices happened while the dealer and the fund manager were working from home. There should have been more robust systems and practices. In fact, SEBI came out with a recent circular. I'm not sure if it's not even an year old, where they said that fund managers can't talk without being on recorded lines from 9:15 to 3:30 in the dealing room, and there are restrictions on carrying your phones out there in the dealing room, and there are multiple other restrictions actually on dealers and fund managers. Basically, it's a very sensitive position, right? So you can't just say it off and that it was work from home. I'm sure the practices have to be much more robust, and I'm sure SEBI will again come out very hard on this one, and perhaps we can all anticipate that some more regulations will come around this, because every time we have seen such incidents happen in past, the regulations have only got tightened, basically. So, and obviously the dealer position, I continue to say that is a very, very sensitive position in all fund houses, and should be highly monitored and regulated, because they are actually privy to all the trades which are happening via the fund managers, and they are the guys executing it on the screen. So I think that got to be fairly well monitored.
Yeah, actually, if you go by the best practices, there should be no one person who should have overriding power to make decisions, right? There should be a process in place, and no one person should be able to influence that. So clearly, this shows that lapse as well, that probably that entire process was missing, where a single dealer could override decisions which should have ideally been taken by the entire fund management team. But Mohit, thanks very much for joining in and highlighting, all of these points. And of course, I want to also point out that there's a new SEBI regulation as well, which says that the CEO must also take responsibility for what goes wrong with the team, and that they might be personally liable as well if there is evidence of wrongdoing. So, the regulator themselves taking these kind of issues very, very seriously. But for now, the recommendation from Mohit and the other experts as well who have spoken to is that maintain the status quo on your policies. There's no fear as of right now to redeem immediately. The next decision should be taken once the findings of the investigation are out. Thanks very much for watching. Closing Bell is up next.